Today we're going to be focusing on the budget speech by Chancellor Rishi Sunak. Are you a contractor who is thinking of buying a property? Are you a property investor with a buy-to-let portfolio through a limited company? Do you have a buy-to-let, or are you an employee who would like to get onto the property ladder? If so, you'll find today's podcast really useful. Hello and welcome back to our channel and podcast. My name's Gemma, and here at WIS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's podcast of Let's Talk Money and Mortgages, we have Vijay here with us today. Vijay is co-founder and director of WIS Accountancy. He's worked in the industry for coming up to 20 years, and it's an absolute pleasure to have him on the show today. Hi Vijay, how are you doing?
I'm good, Gemma. Thank you so much for feeling me quite old. It's my birthday, so it does feel quite old being in the industry for so long. Thank you for having me on the program. Delighted to be here.
Oh, yeah. Well, I know it's been a busy day today because of everything that happened yesterday with the budget. How is the budget different from previous years?
Quite different budget for two reasons. First, being the first budget after Brexit, so a lot of expectancy on that, and the second being the pandemic that we are currently in. So it's a bit of a balancing act the chancellor has to play because there's a lot of giveaways that happened last year. So people have to face the reality, and people have to pay back those grants and furloughs that they got in the previous year. So it's a balancing act. It's not the greatest budget, but not the most disappointing budget either, if you ask me.
Yeah. One of the key announcements on the budget was the stamp duty holiday extension until June. We know that some clients were a bit confused about interim arrangements until September. Can you just explain that a bit more, please?
Yeah, I think Iftika previously spoke about stamp duty holiday in one of your podcasts, Gemma. Just to rewind back and how the stamp duty work, forgetting the holiday part, right? So stamp duty works, first 125,000, typically no stamp duty. Then after 120,000, stamp duty kicks in. So last year before, I think government announced there was stamp duty holiday up to 500,000 worth of properties. There won't be any stamp duty. So that's supposed to end of March this year. What Chancellor has announced is he's going to extend that by 3 months, so that won't end until end of June. From end of June till another 3 months, rather than bringing that back to 125,000, what he's done is he's kind of lower the limit to 250,000. So if you buy a property up to 250,000, you wouldn't pay any stamp duty from 1st of July until 30th of September. And then the normal stamp duty will start kicking from 1st of October to 125,000. So I think that's the confusion. The confusion was that 250,000 part. Some clients didn't understand that part. So effectively, it's a temporary arrangement before bringing back to 125,000 nil grade ban.
So thank you for clearing that one up for us. So it looks like that there's going to be sort of two reasons why people might be interested in getting back onto the property ladder. One of which is the stamp duty holiday, and the second is the 95% mortgages. The Chancellor announced high street lenders such as NatWest, HSBC, Lloyds and Santander will be introducing 95% mortgages from April, which is pretty exciting. What's your view on this?
Yeah, absolutely. I think there are two reasons people will be more eager to get into the property ladder. I think even Prime Minister is keep saying that generation buy rather than generation rent. So two main reasons would be one, the stamp duty holiday, one which is extended until June, and even after June, you can get in the ladder if you're buying up to 250,000 worth of property. And also the 95% mortgage that going to come to the market from beginning of next month. From our understanding, 95% mortgage is up to 600,000 worth of properties. It's pretty much the same sort of rules with Help to Buy. So we do only main difference is you don't have to buy a new property. You can buy a second-hand property. We are still waiting for more details on it. So probably another podcast with Iftika to explain this. Probably when it comes to life next month would be my answer as it stands. Yeah, I think it is the right time to get in the property if you haven't in the past, for two main reasons. One is a stamp duty holiday plus the 95% mortgages if you not managed to save up enough deposits.
Yeah, it definitely looks promising, doesn't it, for first-time buyers?
Yes, it does.
And I didn't hear the Chancellor saying anything about the private sector IR35. Just to clarify, is that still going ahead from the 6th of April?
Unfortunately, it is going ahead, Gemma. So it's already in the Finance Act. So there's no last minute, withdrawal or anything like what they did last year. So it is going ahead. So unfortunately, if you are working as a contractor in private sector, it's very important you speak to your recruiter or client on what they're going to do with your contract from 6th of April.
Ah, okay then. Well, and there's also a lot of rumours about the Chancellor trying to bring capital gains tax in line with income tax. Are you glad that this didn't happen?
Yeah, I'm very glad that no changes happened on capital gains tax for two main reasons. One, the accountancy provision as it is, we are very overwhelmed with all the COVID, announcement that's coming from the government. That's first thing, and the second thing is a lot of the contractors are thinking of, liquidating their company and taking entrepreneur relief. So I'm glad that the capital gains changes didn't happen, so people can still do that. Until some changes comes into place. Yeah, I'm quite relieved and glad that no changes on capital gains tax.
Unfortunately, he also sort of mentioned that unemployment in the UK is at an all-time high currently. How did the Chancellor address that issue?
I think two main things the chancellor did there. One is the extending of the furlough scheme until September next year. We all know the lockdown is going to come to end in June, but rather than ending in June, I think what he's done is extending till September, so people can slowly come back to work rather than just giving a massive full stop on end of June. So it gives a long-term stability, people to have jobs. So that's one good thing. And second thing is the self-employed employment support scheme, or SEIS scheme. So people who are self-employed can get some money in next 2 quarters. However, very disappointed that directors who work by limited companies uh, are not in receiving end of any of the benefits from so far from the government. So it's 3 million directors who take dividends as the largest income were not considered for any of the support by the government, which is quite disappointing. But I think the chancellor stands it that is trying to reduce the unemployment by keep giving furlough, and eventually when the economy picks up, then you won't see a massive unemployment drop.
Do contractors who work via their own limited company, are they eligible for any of those supports?
Yeah, as I said previously, no is the answer. They can get some furlough claims if they don't have any contract, if they don't have any income, if they're not working. But then a lot of the contractors tend to take dividends as their largest income. So unfortunately, nothing for the limited company directors at this moment. As an industry, we need to start to convince Chancellor to come up with a scheme, because it's been a year since that all these COVID schemes been put forward by the government, but Chancellor continues to ignore the limited company directors, which is quite unfortunate.
Yeah, well, let's hope that changes moving forward then. What are the changes to personal taxes? Because I know that there was definitely something mentioned about personal taxes. Do you want to elaborate on that?
Yes, so unfortunately, not much of a change for personal taxes. So, normally a tax-free allowance where people don't pay tax up to 12,500. So that's been increased by £70. So that'll be 12,570 going forward. And higher tax threshold where people pay basic rate tax of 20% was a 50,000 last year, and that will increase to 50,270. So not a significant increase. So, don't expect your tax bill to reduce. So you tend to pay more tax if you pay increase during the year. But from all the industry report that are coming out, a lot of people are not getting pay rises because of COVID. So there wouldn't be a massive change into your personal income, if you ask me. Not even by the inflation increases. So typically, chancellor tend to increase your personal allowance and your tax threshold to be in line with inflation, but this year that's not been done, so it's been frozen until 2026. So it'll be the same rates until 2026.
Now, the next thing is a bit of a hot topic. The corporation taxes. What's happening with the corporation taxes?
Yeah, the lot of the money that chancellor is trying to gain is from corporation tax. From his budget statement yesterday, from 2023, corporation tax is going to increase significantly, for especially for not for the smaller companies but for the bigger companies. So people who have SPVs or have buy to lets through a limited company shouldn't be worried too much, because if your profits are up to 50,000, you will still pay 19% corporation tax. If your profits are above 250,000, your corporation tax will be 25%. Anything in between 50 to 250,000, you'll pay something called a marginal rate. So it's a complicated calculation, which I'm not going to confuse people with. So if you're a small time buy-to-let investor through a limited company, I don't think it'll impact you so much. But if you're a large company who have more than 50,000 profits, you should be worried.
Yeah, okay. And what would you say are the key takeaways then from the budget yesterday?
Key takeaways, if you ask me, Gemma, one is the not much of impact for personal taxes. Its numbers stay as it is compared to previous year. Uh, Good thing Chancellor didn't do anything on the capital gains tax, which is quite promising for contractors if you want to liquidate the company, take entrepreneurial leave, and invest in properties, etc. Um, and also other schemes that Chancellor announced, like the new recovery loan scheme, which replaces bounce back loan and coronavirus business interruption loan. That's the new 25,000 loans available for that, but with 80% government guarantee. So that's another thing which will help businesses with their short-term cash flows. Things like help to grow, help to digitalize, extras. Some other announcement came from the budget yesterday. One other important thing that I forgot to mention when I spoke about corporation taxes, there's something called a super deduction. I know it's a very funny name. So basically, what it means is if you buy equipment or machinery for your business, typically those are not expensive. People assume those are expensive, but those are not expensive. Those are assets, so they sit in as an asset in your books. So typically you get something called a first year allowance. If you buy something for £1,000, you get £1,000. You can deduct that £1,000 as a first year allowance from your profit when you calculate corporation tax. What Chancellor is suggesting is rather than deducting £1,000 going forward, you can deduct that as £1,300 by increasing by 30%. So that's something called super deduction. The whole point of that is to increase people on spending investments. So that's will be attractive, for people who are thinking of expanding or investing in machinery, etc. It'll be better off they do it, after April, because they will be eligible for this super deduction scheme.
Yeah, no, that sounds really good. So thank you for adding that one. As an accountant, what is your view of the budget?
It's a tough one to call. My view on the budget is I think Chancellor is being very cautious rather than kind of splashing out. Personally, I'm quite disappointed he didn't talk about NHS or any of these key workers who've been tremendous help to everyone in UK throughout this pandemic. So I'm personally disappointed that Chancellor didn't do much or talk much about NHS staff or NHS. I hope I hope and wish that he should have mentioned the greater sacrifice they made to this made during this pandemic. I do understand his cautious approach, because we have to face a reality. I do understand that, but if you ask me, I think he would have been much generous, because people want to come out of it, and the only way to come out of it is through extra spending. And then he would have start austerity, etc., in a couple of years time. But there's another political motive too, right? I think what they're trying to do is they're trying to kind of increase the tax now, and in few years time when they have the election, they're more likely to throw away a lot of the tax deductions or giveaways to win votes. So there's a two element to it. I totally understand what Chancellor is trying to do, but as a business person, as someone who want to businesses to thrive, or someone who always encourage people to take risk, I would have wanted Chancellor to take the same approach. Either help entrepreneurs, help small businesses who've been a backbone of this economy, throughout the pandemic and throughout even the last crisis. So I wish Chancellor had the same approach, and done something to small businesses, to either to increase their innovation, investment, or encourage their risk-taking attitude, rather than penalizing directors of the company and small businesses by putting increased corporation tax. Yeah, so it's both ways. But if you ask me, I would have preferred him taking approach of more spending, more tax cuts to get the economy back in track, and then go into tax increases in future years. That's our.
Yeah, it's a shame, isn't it? Because I know a lot of small businesses have been massively affected, and you're right. It was a bit disappointing that he didn't mention anything about the NHS because what they've done for us is amazing. Yeah, but thank you so much again for joining us today. There's some really good tips in there, so thank you for that. I just wanted to put a reminder out there that this advice may or may not be applicable to everyone, so make sure you speak to an accountant or broker. And if you are looking for an accountant or a mortgage broker, I will leave our WRS contact details below. Please remember, as a mortgage is secured against your property, it may be repossessed if you do not keep up with the mortgage repayments. We will be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.
Thank you, Jenna.